Hey Wayne, you hear me all right? Awesome. We'll get started here in a couple of minutes. Brad, I will be talking about a lot of that. About 2 minutes. About 30 seconds, just finishing up something. Welcome, everyone. It is 9 p.m. Eastern Time, and it is time for the Kendall Report. Thanks for showing up tonight. Really appreciate it. Before we get into too much tonight, I just want to tell everybody it's going to be incredibly important to sign up to the kendallreport.com. All we do is get your email so we can contact you. There's some things going on that I'm going to only be distributing through that email, so make sure you sign up. So it's simple. We don't bombard you, we don't spam you, but we do have some things that are being worked on right now, and it's going to be super critical. So having said that, let's get into the report tonight. Wow, what a day, huh? I mentioned last night that I thought we were very vulnerable to the downside. Well, we certainly were, and you know, trying to put a finger on really what is going on here. Obviously, the 10-year had a lot to do with things that are going, that the decline that happened today and printing up well over 1.51. We printed, I think, 155. I'll go through all the details here. We'll talk a little bit about the yield curve, and I'm going to discuss here in a minute the, I don't know, what do you want to call this little show that Yellen and Powell put on today? Well, I can tell you it wasn't very well received. And the title of this, when you see this video title on the replay, is inflation. Inflation is here, and it's going to stay here. And I'm becoming even more confident in the call that I made a couple months ago. And we're just going to see this thing continuing to grow. I don't know how best to put this other than about what we're about to see across the board is just an absolute shit show from everything that, and people are going to say, oh, this is Fox. No, it's reality of what is about to happen in Washington, okay? This is very real to me, and it's going to become very real for you. And all this bickering and craziness over the debt ceiling, I think they're going to take this thing down. It's starting to look like that. Maybe they'll stay up all night on October 1st and have something by morning. But I think, call it whatever you want to call it, things have gotten so crazy that they're going to push this thing. They're certainly going to push it over the edge. How long they keep it there, we'll see. If you remember, many years ago, the sequester lasted for several months, and it's just going to get, I think, crazy at levels that you've never seen crazy before. And the numbers that we're going to start to see going forward out of the increases in just about everything. I'm going to show you in a few minutes. We're going to go through the Baltic Shipping Index. Shipping costs are just soaring, and they're not going to stop. This is going to get way worse. This winter, I don't think it'll be so much about COVID, but it is going to be a lot about inflation and expectations that are going to be moving forward. I mean, Yellen and Powell today spent a lot of time talking about stuff that I didn't even know was a thing, meaning I thought the charter on the Fed was about financial. They spent all kinds of time talking about social issues. And I think the old saying, and I'm just going to put it out there, go woke, go broke, is becoming very real. And just the talk that these people are putting out there, it's one thing to have an agency that should be dealing with that stuff, but to have the Fed and the Treasury spending so much time talking about this, it was pretty laughable to say the least. And this is on back of crooked Fed members, and I said last night, I'm really pissed off about this, and I usually keep my language down. I guess I can say that, but the Fed presidents benefit from the markets, and the senators do all this stuff, and people like Warren and everybody calling this out. With all of these people are playing games. You know, how do you make 150 grand a year like Joe Biden and end up with multiple houses all over the place? We know how it is. I think it was Samuel Clemens used to say the only rich politicians were crooked ones. And what we're seeing here, and I put this on Twitter today, is layers and layers of corruption being revealed. Now we have the two Fed members. Did they get fired? Did they get penalized? No, they're going to retire early. How nice, right? They'll still keep their cash flow, their pensions, and all that stuff. I saw another story, 132 federal level judges ruled on cases which they had financial interest. Now, I don't know what that means exactly, where they owned stock or they had something to do with it, but 132 judges. So that's what we're dealing with, this corruption. At some stage, I don't know where this ends, and I know this channel isn't about that, but it is about understanding the risks that come from this type of stuff. It affects market sentiment, and sooner or later, everybody throws in the towel, and it gets very ugly very quickly. Today's sell-off that we had was brisk. It's bouncing back right now. I'm looking at the E-minis up 16 and a quarter. The NASDAQ up 54. It was up 70 when I started this just a few minutes ago. So there's going to be plenty of volatility. But as far as what's going on in the markets themselves, the market sentiment is just turning very, very quickly. And I think this is going to be an issue as we go forward. It's going to get harder and harder to believe in the system. So and I'm not calling the major top just yet. I'm actually going to let you folks know. It's possible I'm going to be able to do a live stream tomorrow. There's a couple of things pending that I have to do. So follow me on Twitter so you'll know when that happens, or hit that notification bell here on the YouTube channel so you'll know when I come live. But if I do come live, it'll probably be around 1:30 like I usually do. And if I can stay full on, I will, and we'll do some individual stocks. But there's a lot of things going on right now that I think are affecting the markets. And, politics do have an effect. Taxes have an effect. They're talking about just to continue down the path, not just the debt ceiling, but then we also have this reconciliation bill, $3.5 to $4.5 trillion that they're trying to spend. And it was promised that would be passed by Thursday. Not sure that's going to happen. And if that doesn't happen, as you move from this point forward, just because Nancy Pelosi put the line in the sand, if we go beyond Thursday and there's no deal, they don't bring a vote to the floor, then that is going to tell you that it's going to get more and more difficult. And I think what that tells us then, the debt ceiling, the infrastructure deal, that might end up, if that bill fails, that might be more of a positive than a negative. In fact, I believe if it passes, it will be a negative, because ultimately you're going to see an increase in taxes. And I know there's a bunch of you thinking it's not going to affect you because you don't make $400,000 a year. But if you have IRAs, and there's a whole lot of taxes that are going to be systemic across the entire economy. So it ultimately affects everybody in one form or another, whether directly or indirectly. So, I've been around this planet for a few days, and I've watched politicians throw these lines out there and many times. I went through a lot of presidents, and I went through every Fed chairman and watched them operate since Paul Volcker. So you watch these people operate, and as we went through and we get into Bernanke and then Yellen and now Powell, it's really getting kind of scary what's happening, especially with the integrity of the Fed. I think one of the very first times in all those years that I've seen the integrity of the Fed being challenged just by these idiots making money on this stuff. And, most of these guys are already wealthy anyway. Powell is a very wealthy guy. So he's got now a lot of opposition. I think it was Senator Warren that said that he's a very dangerous man. She's not going to confirm him. So whether he goes forward, what we end up with next will be very interesting. And my guess is that Powell will probably be out right now, the way just a feel. We'll see how the events happen as we go forward. It's a little ways away before we'll have to deal with that. But the Fed's integrity is on the line. Everything's on the line. Everything's kind of unraveling to some degree. And whether this is the aftermath of shutting everything down, everything we've been through over the last 19 months, that matters. And folks are just becoming more and more. So I'm sorry to get off on this little tangent here tonight, but I think there's something really happening here with market sentiment. That's why we saw that sharp sell-off yesterday. It's pretty relentless, and I'll talk about this a little more when I get into technicals, but the liquidity hung in there pretty good again. I was impressed with, there wasn't some periods of time that it was completely illiquid. So we'll go from there. And let's go ahead and start to dig in a little bit to the, I want to actually go over to the database as I usually do, and I will zoom in on this, and I want you to see this. We dropped to 25% long. We were around 32 yesterday. We had 2,279 sell signals, 110 buys, so big time, 22 to 1 on the sell side versus the buy. So this is pretty substantial from that standpoint. Down to 25%. I've seen it as low in extreme cases down to around 7 or 8%. We did see this last year where we saw what I call a full liquidation on the database, and that's certainly a possibility here. But at the moment, we're just going to have to watch this and see how the next couple of days go. And I'll talk in more details, but we did get an STX buy signal yesterday, and I did see somebody on Twitter tweet out something about we got STX buys, potential SPX buy signal on the daily today. We got that on the weekly if we stay below that level at the end of the week, and potentially on the monthly. We've only got 2 more sessions left in the month, so we're coming down to the end here and finishing the first month of the fourth quarter. So I take that back. We're finishing the third quarter. That will work a lot better, won't it? So, but we're coming into that final month of finish of the third quarter. So we come into fourth quarter. I've been talking to you a lot about, I think we're going to see employment. We're going to see a lot of things start to really downtick here, and it's going to get harder and harder to get this market to even think of rallying. And the element that I'll be watching, and I'll talk about this more as we get closer to Friday. I mean, it's Tuesday night, right? So if we get closer to the end of the week, is our intermediate database, and we start to see a rollover there. And I'm going to show you a couple things here that I think is interesting. Even though the database on the intermediate is around 55% long, I was just going through some portfolios here just randomly, and down here it shows that this portfolio is in 40%. So a lot of the portfolios out there, and I'm just doing a random look at these particular portfolios, is we're really just seeing, I'm just grabbing some things here, like I said, just total random on this. Even our what we call ETFDI, it's a domestic international ETFs. There's 6 of them in here. Even that's at 40%. So there's a lot of portfolios in the system right now that are actually between 40 and 60% in cash. So even though the big intermediate trend hasn't rolled over yet, we're seeing this thing start to roll over. And while we're just here on WaveTech, if just to remind everybody that there's 2 more days left in a special for portfolio experts, so hopefully you can get involved with that. And there'll be a link at the end or in the description for you to go ahead and take a look at that. But the bottom line is that this database is not rolled over in a big way yet, but we're already taking protection in a lot of these big portfolios and some of these institutional portfolios that we follow. And we're just seeing a lot of that happen here. I did notice my good friend Kathy Wood at Kathy's Casino was actually starting to feel a lot of pain. And if Tesla rolls over, we'll go through that tomorrow. Hopefully I'll be able to do this live stream. If not, I'll cover it tomorrow night. But these stocks are starting to look a little toppy here, and a lot of things are likely to go on. One of the things I didn't cover in the front end of the video was something. There's literally no news coming out today that on Wednesday that's going to affect these markets. There's nothing. Pending home sales may be interesting, but I don't think it's going to be material from that standpoint. So let's go ahead and dig into the futures here. As I mentioned a few minutes ago, and I'll go full screen in a minute, we did get an STX buy signal. That suggests we go up to sideways. We're only up 11 handles. We were up 20. The high's been 66 on the upside. Let me bring this the grid over. The high's been 43.66, R1 59, 76 is R2. So there's a likelihood of at least getting possibly up to an R2 rebound with the STX buy signal. Worst case, 43.28 is going to be a bit of a stretch because that would be new lows, and that's where the S1 number is, but that would be an absolute new low. Now, I tweeted out something earlier today. I talked about a key number at the 43.35 level, and I said we're testing that key area. Now we're bouncing a little bit off of there. I'm just going to bring up a couple things here that I believe are going to be important. Let me go full screen so you can see this. But a couple major things that are here. 43.36 is the 21-week moving average. And we're seeing, look at the PPMs over here. Let me get this so you can see this a little better. PPMs are deselling big time. And in fact, when we look at the PPM1, it is a negative 0.09 right now. It's sitting right on the 21 period moving average. PPM2, which tracks to 21, is actually at 16.164. So it's vulnerable. And the numbers that we're going to need to watch for the next couple days on the futures here is going to be last week's low, 42.93. But prior to that is going to be this 36 handle, 43.36. If we get below that, then watch out. We're probably testing next week's low, and the minimum decline I will expect to see is down to the 41.38 handle. Now, the only thing that's going to change this outlook at the moment is some kind of massive reversal. We'd have to get back over 44.37. It's early in the week, so I'll cover these things as we go. As we come into Wednesday and Thursday, so I'll cover all that there. So let's go ahead and take a quick look at the SPX. As in the, let me get over to the daily first. See, we clearly had a STX buy signal. So we look at the grid for tomorrow. We're looking at 43.62. We went out at 52 based on the overnight futures. We're at least going to hit that. We're probably looking worst case S1 R2 for tomorrow. But look at this deceleration in the dailies. We have a minus 0.20 in the PPM1, and that looks like based on what we're seeing with the futures up overnight, this may turn up, but we actually have crossed through first second derivative. We're through first second derivative on the PPM2, and PPM3 is also down. These are not real positive things to look at here. That's definitely a big negative here. And just like with the futures on the weekly chart here, your key number 43.52 on the cash. We went out right at 43.52, so we closed below that. the big number. And downside, we're going to have to take out that 43.05 lows that we made last week, and then watch out. We're heading straight down to probably 41.60 handle. So this is starting to look more like a correction, especially seeing all the PPMs roll over. All this stuff that's happening is significant. So let's go ahead and go to the NASDAQ. This thing got really ugly yesterday. We're only up 29 handles. It's interesting because when I was looking at this just when we about to go live, it was up 70 handles. So we've retraced quite a bit here. So here we go. Yesterday's low was 14,720. We went through everything on a daily. PPMs are now big time in downtrend. PPM 1 on the NASDAQ minus 0.46, minus 0.24. And those two there are just telling you there's going to be major resistance overhead, and that we're going, at worst case, go a couple of days sideways after this STX buy signal that we got on the futures. So that's why we're printing up a little bit. But looking at the grid for today, we're looking probably an R2 14,919 would be the extreme. 14,837, we've already hit that shortly, just a little bit ago. So we printed an R1. So look, worst case, same range, S1, R2 for this market. Let's take a look real quick. I want to go to the weekly chart here. And we're right down to that 40 period moving average. I'm sorry, the 21 period moving average at 14,662. Low was 14,740. Breach of that, then the next level is 14,100. And all of a sudden that reversal, if you recall, many weeks ago on 9/10 ends up to be a substantial number on the charts. So that's going to be the potential beginning of this pattern and maybe a more major decline. Now, I didn't look at the monthly on the other charts, but I'm going to bring up the monthly chart on here. This is, since we're coming into the month, the STX monthly 14,639, low 14,740. So we're just short of STX, and the demand line here is going to be quite a bit lower, down at the 10-month moving average 13,903. So beware as far as the market goes this week. We're just looking at somewhere around 15,353 would be an extreme, and even though that's an S1 on a weekly, it looks like we're going to stay underneath that number. And just last week we were able to print that new high, so this is a big switch. Let's go over to the Russell. One of the things I talked about happening yesterday, we talked a fair amount about the Russell and what's going on there. And what we saw at that level was, I told you that even though the market may go down, that the Russell will overperform. It won't go down as much. So that happened by a little bit. I'll show you the spread in a minute. But this is a big reversal from how everything looked. And I want you to notice the PPM2 here. This is this indicator down here. I put a cursor by it. That thing completely flipped in one session. So it went from a positive to a negative, and we're seeing the same flip going across the board. So the key number we're going to have to watch again is going to be 200-day moving average 2213. That'll be your pivot number. Below that, you're looking at something. This is the daily chart. You're looking at some potential for much lower prices. Looking at the weekly chart, we're back into the moving averages, 2232, last trade 2229, so we're just above that number. But the S1 is, this is weekly, Russell. S1 is 2230, 2209 is going to be most likely any extreme that we're going to see this week. All right, let's go to the spread real quick. And this is exactly what I was talking about yesterday. Even though the markets were up big, the spread continues to increase. And there's just some rotation going on there. And we're still seeing the energy stocks were actually positive slightly, and the financials are faring a bit better than all the other stuff that's out there. The tech stocks got hammered, all that stuff. But we're still seeing that rotation happening that I talked about last night. So if you didn't see that, then you're probably looking at least going back and watching that video last night on the coverage, because that I went through a lot of detail. All right, so it's time. Let's go to the 10-year treasuries. This is weekly. I want to start with the daily, and this thing's running a bit out of control. We're trading at the upper end of the band from the market grid viewpoint. We actually exceeded it yesterday, high 56.7. The extreme was 51.54. And we're seeing this thing just continue to go up. We look at the market grid for today. We're once again 157, 158 is possible in today's movement. And we're looking at, and I've been talking about this for multiple days, look at the PPMs on this chart. They are screaming. This thing is accelerating. And I still expect to see probably some consolidation up here, but we go to the weekly chart. What you'll see there is at least for this week, the extreme is 159 is RXT. So we're pretty close to that. But like I said, we're seeing all the PPMs daily, weekly, everything accelerating. So that's telling us that rates are going to continue. At least the expectations for the moment are that the Fed's going to taper, the inflation is going to kick up, all this stuff. Now, there's something that I told you I was going to bring up that I didn't. I'll do this real quick here. And I want to go to the Baltic Index that I said I was going to show you a bit ago. And let me move this down. Bear with me 1 second. There we go. What we're going to see here is this thing is just going to the moon. And if we go back and look at some of the longer term stuff, we're still a long ways from the 2008 and 9, believe it or not, was when shipping costs went through the roof. But we are definitely expanding. This thing doesn't look like it's going to stop. The PPMs here are actually looking pretty solid. And this is the view of the PPMs and the market grid on the trading view. So, but this made a new high again. This thing only updates once a day. So that was that. So, but I want to see this. This is a weekly index, and I'm just trying to get to the point where we go to monthly. You'll see some things going crazy here. So the monthly chart just continues to go up as well. So this is interesting to say the least. All right, let's go back to TradeStation. I did want to cover one thing before we moved on. I know I've kind of all over the place. Is the 1030 spread? This is the yield curve. This should be this 1030, and then this should be the 530. And these have been flattening. They're starting to stabilize a little bit. And what this tells you is the Fed's going to invert their purchases from what they have been. So they're getting a little nervous. I mentioned this whole flattening situation that the Fed was losing control of the 10-year. They need to gain it back. So there's going to see some concentration on buying the longer end of the yield curve by the Fed. And I saw something that I thought was interesting today, is that since the whole situation and the Fed came in last year, they have purchased, this is an amazing number I'm about to tell you, they have purchased 57% of every treasury bond offered by the government. So it's not supposed to work that way, right? So people are talking about people buying bonds. It's the biggest buyer now is, I used to ask the question, and this has been the case for a little while, ask the question, who's the biggest buyer of treasuries? Almost everybody said China. Well, it wasn't. It was the Fed. And now it's definitely the Fed. So the Fed is the biggest buyer. They're monetizing the entire system. This is just getting crazier and crazier. They moved since the beginning of March of last year. They moved the balance sheet from 4.1 to 8.3, added $4 trillion. The current administration is trying to spend another $4 trillion. And anybody that thinks inflation is not going to get worse is wrong. That's the way this is going to work for sure. Okay, so let's go two more markets and we'll call it quits. And like I said, I'm going to do my best to put this together and do a live stream tomorrow. I'll be alerting everybody via Twitter, but look for around 1:30 tomorrow. I don't know if I'm going to be able to do a full one, but it will be most likely something. We'll see how the market's trading. S&P now, this is interesting. NASDAQ was up 75 plus, now up 25. E-minis were up 20, now up 650. So there's some selling coming into the futures as we speak. So let's take a look at two markets and we'll call it. The crude had a bit of a reversal yesterday. This is a weekly chart. And I do expect to see the crude stabilize here. And I talked about this a fair amount. We should stay above around $69, $70. There's going to be a little bit of consolidation up here. And ultimately, we'll see the PPM start to accelerate and all this stuff will come into play here. And we look at the shorter term and go to the daily. A daily, you see that we come in overnight. We moved off the highs pretty good yesterday. We printed up to 76.67. So we're printing back in here. Key support 72.93 all the way down to $70. So we'll call it 73 to 70 is going to be major. The angle of attack's good. PPMs are faded a little bit. We'll keep an eye on what happens to that. But going back to the 9/21 on September 21 is when we got that signal of the new cycle, and it was confirmed on the 22nd, and we've been up since. So there's been a couple bottom cycles come in here on this market. So another tough market that I've been talking about is gold continues to move lower. I talked about a couple numbers. The flash crash low, 1677. We printed the low yesterday down to 37, so there's quite a bit of selling coming in. And finally, it looks like if we can stabilize for the next two sessions, we should see the downward pressure burn off. We're in trend mode on the downside right now. This is going to be critical, and I'll cover that over the next couple of days. So the key numbers to watch out for, and I'll just go to weekly for a minute. The key numbers are going to be right at this. Let me put this on the screen for you. Right at the S2 number is 1723, 1709, and then 1796. These are going to be key numbers to watch as we go into the week. The only encouraging thing is that it will take probably another week or two to go sideways here and stabilize and get the ppms to turn up and have a possibility of going up. But right now it looks like there is a pretty good chance that we're going to move and possibly retest that 1677 level. Upside resistance 1780, 1775, 1780, and that right in line with R1 on the weekly chart. So that's going to do the broadcast for tonight, folks. Appreciate everybody watching. Went a little longer than I would have liked, but we're here and done. Like I said, make sure you subscribe to the channel, hit the bell. I'll probably do a live stream at some stage. I'm planning on it being around 1:30, and it just depends on, there's a couple of variables here, but I will definitely be tweeting that out. But if you have the bell on, you'll know when I come live, and we'll do as much as I can. Again, I think the last time I was able to do an hour and a half, not the full 2+ hours. Anyway, folks, thanks for watching. As always, I really appreciate the participation. Make sure you go to kendallreport.com. Give us your email if you're not already subscribed there, and so you will be alerted to some of the things upcoming. Thanks again for watching. We'll talk to you tomorrow night, or actually tomorrow during the live stream. Here's that link to get the expert.